Hello, Warriors. Everyone doing okay? Finally got that breakout in Euro over the triangle. Ready for this year to be over. There you go. There's a breakout. So we'll see. We still haven't surpassed the high yet. Should do it. Okay. So, what are we talking about? Actually, the measured move would be something like this from the breakout level, 23 and a half or so. We'll see. All is awesome in Kenya. Okay. COVID in Kenya. Isn't it a pandemic, meaning it's everywhere? And, great call by Steve Volge yesterday uh, on this pullback that we had in cable. I think he showed the daily that we were just grinding. You know, now that I look at it, I could see the possibility on the daily of maybe one more high. See if the 4 hour. I'm sure there's a bunch of stops up here, but yesterday's bar was pretty negative. Negative. So EG has really started to perform again. It's really been a tough trade, this EG, but it really still hasn't negated potential upside. I have supporters. Oh, thank you. It's it's nice to have support, you know, and people that appreciate you. I hope I'm adding value. You're learning a few things, Mark, and your community down there in Kenya. And maybe you guys would consider becoming part of the community here at Forex Analytics. Crude came off pretty good yesterday. Doesn't show as much, but on the 15-minute, it had a pretty good break. This action isn't so, you know, maybe this is A and this is B and we're going to get a C. I'm tempted to trade, but I told myself I would wait until New Year's. So even though it's a turnaround Tuesday, what I'd be most tempted to do would probably be if we made a new high in the S&Ps, which was like 59, and doesn't look like it's going to do it. But I mean, you have confirmed highs on the S&Ps on the 2 hour, same with NASDAQ. Okay. So I have to drill down either real long term to a daily where we're still diverging on both, right? Or go to something like a 15-minute chart where we've been diverging here for a while. This looks like a 1, a 2, a 3. Maybe I'll attempt it if we take out this 37.59. It's only 5 handles from here. Same scenario. We have actually NASDAQ is even a little more bullish. Thanks, Didier. Everyone see this RSI reading on the 15-minute? So when I see this, this doesn't matter as much, even though we're making a lower high. I'd like to see NASDAQ, if it does it today or tomorrow, make a new high. Also, I know you guys think I'm a lunatic, but we do have a full moon tonight. Okay, so I was thinking Tuesday, Wednesday for maybe some turns for a scalp. I'd wait for NASDAQ to make a new high and see if the RSI stays under 70. Okay, so maybe wrap it up with the Dixie. Still holding the 90 area. It's trying to hold, but, still looks negative, thinking that we make new lows into next year. And let's just take a look at the weekly and see how that looks. So I think there's some stuff right here around 89 and a half, and then more down here at 88.90. So So far on the week, not doing anything really right. Inside week. So it'd be nice to have an inside week. And then the beginning of the year, we start off lower and then reverse. That would be a pretty nice market tell for not, not a huge super move initially, maybe back to this low, 91.70 or so from wherever we bottom, but we penetrate 91.70, we could squeeze. When I look at it intermediate term, we really haven't had a decent correction, except this was okay. So with a move like this from 103 to call it 89.14, why can't we rally halfway back sometime in the first quarter back towards 95, 96? And that's kind of the move that I'm expecting. And the dollar bottom should coincide with some type of corrective action in risk. So any questions on anything I've talked about, or any instrument you want me to share my view on for you guys? How about US dollar yen? Okay, so still in this massive triangle here. Almost looks like we have a 1 and a 2. Looks like 228 at the bottom of the line. Cryptos, yeah, I think I have Bitcoin up here. We've come off a bit in Bitcoin. I hate cryptos because I don't really understand them. Last January, what a great call to buy it at 3,000 last January. Although I couldn't sit for a year. I can't remember the last winning position I've had for a whole year. Wow. 27.5. Yeah, I mean, we are diverging here a little bit, but look at the reading. I can't fade it. Maybe it's a flag. I thought we had a 3 drive here. It turned out to be nothing. So it's an IDK. And I'll wrap it with silver and let Blake come in here and take over. Silver still has, for the first time in a few days, it's underperforming gold. We're down 6 cents. So the bearish case is that this ends up being a lower high right here. And, you have to risk if you want to short it. And, up until today, it was really outperforming gold. Although if you look at the gold silver ratio, looks like that could rally, which implies silver would be the short. So just something coincidental that makes me think that this formation has some credence. If you look at 27.5 and 25, and that this may end up being a triangle as well, and we break through 25, it's going to give you 22.5, and 22 approximately is a bigger triangle. There's 21.90, and that measures pretty deep down here under $20. So we'll see. It's a possibility. We'll see if it manifests or not. So I want to thank everyone for hanging out with us during a shortened holiday period. And if we've been helping you, you need to go beneath the tip of the iceberg to the heart of the matter, which is our subscription service. And you have so much research here that you could spend hours on this site absorbing a lot of things. And besides a lot of things, a lot of analysis from different disciplines, Elliott Harmonic, basic technical, candlestick, and macro, and so many charts. And, depends. I'm a Rothschild. Okay. All right. So today could be a good day to step up and join and, do this for yourself and hang out with us in 2021 and have a good year. So with that being said, I'm going to pass this over to Blake now. remember, we care about what happens to you guys. I know this business can be a revolving door, but we slow down the revolutions here.
Hey, how's it going, Coach?
Hey, buddy.
What's going on? It's you know, you concerned me. You said it's turnaround Tuesday and you might not trade.
Yeah,
Wow, I'm
yeah.
concerned now.
Well, I'm taking what Stell said to heart, that I think he used the word proper, that we'll
Yeah,
get proper signals, when everyone comes back and it's not, where illiquidity can just move markets around. And you know what, if I miss a turnaround Tuesday trade, the difference between now and say 10 years ago, it might have aggravated me. And now I just go, so what next?
yeah,
There's always another bus around the corner, my friend.
right. Yeah,
So,
that's and you have to take that approach, especially during um these periods where the market is extremely thin. It is a holiday for all intents and purposes.
yeah,
So you have to just kind of you know
yeah,
be very selective on what you're doing, and just wait for prices to get there,
yeah,
and or do what you're doing is just you know taking it
yeah,
easy and not
yeah.
even trading at all.
I mean, I have ideas, and if they're still there next week, I'll execute.
Yeah.
But I'm not going to commit into a chop fest and try and be. Let's face it. If you were very successful this year, you had a great year. You're up 30, 40, 50%. They're not trading, right? So I
No,
mean,
no.
maybe the robots are, but most people, they had a great year. They've squared their books, or they're squaring their books, and they're getting ready for next year. I want to
Right.
hang with those guys,
Right. Yeah, that's
not the shortstops trying to make have to trade every day.
yeah, and you shouldn't have to beat yourself up this time of year if you've had a good year. But some of us haven't. And I'm going to tell you guys, I have had probably one of my worst years that I've traded. And that's predominantly because I've been involved in the chop fest. The FX market has been kind of choppy this year, but next year is going to be great. I know next year is actually going to be great. I'm actually quite excited about it, but that is part of the business. And if you know, for somebody to come up here and tell you that that's what happened and that's what happens, it's most people just can't swallow that pill. Then they're going to fake it. But I'll tell you, I've had one of my flattest years on record. I haven't made much this year, but that is going to be what happens if you're in this business long enough.
Yeah,
I've had some
it's
years
like
where,
I had a manager once when I was a
yep,
commodity broker in LA,
yep,
and he said, Dale, if you drive a cab, you're going to get tickets. Right. So if you're a trader, you're going to take losses. If you drive a cab, you're going to get tickets. It's just part of it. And, I could bring up, very famous people like Paulson and
yeah.
Tudor Jones that have drawdown years, Blake, and they're legends. So it's just part of it. Your attitude about it is more important than the P&L. And, I've
Yeah.
noticed this week, despite whatever you went through this year, your added I don't notice any difference in your attitude. It's still positive. You're still enjoying it. And that's a mindset for victory.
Well, I think a lot of people are um a lot of people, what happens is they get really down. And one of the best traders that I know, and he is, well, actually I should say hands down the best trader I know. He always says, look, when you take losses, it's how you bounce back. That's the only thing that really matters. He's like, if you take a loss, how do you come out of it? um and he's like, you are going to be flat. You are going to have down, months or, quite possibly years, but it's how you bounce back out of that and your attitude coming out of it. And that's important.
It's everything.
It really is. And I've had great years, and I've had, and mostly I think the reason why, and I can actually, this is not my market, and I'll tell you why it's not my market, is because I can't take swing trades in this market. You have to just kind of, in the currency market, it's been more of just, you just sit there and go, I was in a nice profitable trade, and a tweet would come out and derail my trade. And by the time I could get to it, or, I'd have my stop. So, far enough away where you think it's out of the way, and it's,
Yeah.
you're like, ah, it's not going to get tripped. And then it gets tripped because, some erroneous tweet would come out. I look at kind of what I do, and I think about institutional guys and gals. Like I remember, I mean, most vivid memory is obviously my most recent one, when they were negotiating the stimulus package, what, 2 months ago. And I was I forget what it was. Like, Donald Trump said he's walking away from the deal. And I remember I got short the dollar, or no, long the dollar, I think, because of risk off. And my son's playing soccer. He was at he's a keeper, so he was his goalkeeper, training. And I was walking around the park, and I had, my music in, listening to my, Apple Music, and, flying around the track, just trying to get some exercise. And all of a sudden, my phone just starts going berserko. Next thing you know, order got tripped, and I'm like, what the hell? And it was an example where I was up, like, literally my entire month's profit was gone within, 30 seconds. And how am I supposed to sit there and watch a position like that? And, this is at 8, 9 o'clock at night for me. And if you're in Europe, I mean, that was 2 o'clock in the morning for you.
Yeah.
Like, how are you supposed to anticipate that? Especially when you have, I was sitting on a month's worth of profit that were gone instantaneously. And I was down on the month within 30 seconds after that tweet that he was going to come back to the table, or I forget, whatever it was. And that happens, right?
Yep.
How many times has that happened to me personally this year? A lot. And that's why I sometimes I feel like I was in a gerbil ball this year, because it really felt that way. And so and the reason I'm telling you guys these stories is because I want you to know that you're not the only one. I mean, I've had nice profitable months that have been derailed like that, like within minutes. I've had a good month 1 month, and then the next month I have a bad month because I get sideswiped a couple of times. And so I've literally spent the whole year just kind of, spinning around. And there are a lot of times where if I just, took the profits off the table. I mean, if, you go back in hindsight, it's always 2020. If I would just been a little bit more active versus being a swing trader, I would have probably had a really good year. I think about all those times. It's like, man, I was up that money. I should have just taken it instead of trying to ride it out for 2 days, because trends in the FX market just hadn't stuck for a couple of days at a time. Right. So anyway, I'm telling you guys that because I'm actually looking forward to next year. Next year, we have a new president, which will be nice, because then bigger money will come back in the FX market. Trends will establish themselves a little bit more because people are willing to take on more risk. If I can't take on big risk in the market, how is an institution supposed to take on big risk in the market? You can't, because you can't put yourself in that situation where, you are at risk of unwinding a huge position that you have out there, right? So you can't do that. And now that pretty much every central bank is zero bound, and we have, rates are pretty much at the lowest levels that you're going to see near term. Now you're going to have expectation shift, whether it's inflation expectations or, central banks start to say, oh, we're going to lift off in 2021 versus 2022. We're going to start to raise rates, or, you get those expectation shift. That's what's going to create movement. Now that everybody's here, now that everybody's at the lowest levels that we expect. So anyway, I'm just pointing some of these things out, I guess, because, it's,
Yeah, because you think that people have the misconception that people that have been trading for a while, that it's always smooth sailing, and they need to know that, we all travel the same winding road to
oh,
profits.
I'm
Yeah.
not, yeah. And I'm not here to tell you the things that you want to hear. That's not why I'm here. And anybody who's been listening to me for, 15 years.
Blue sky.
Yeah, rainbows and unicorns all the time, guys. You can make bazillions. Now,
Yeah.
that's I was just watching a video from uh is it Ken Griffin? Citadel's CEO. Guy's amazing. He's Netflix made in 1999. 2019. Netflix made 6.2 billion. Citadel, the hedge fund, I think made 6.6 billion.
Wow.
Yeah, you don't hear that all the time, right?
Yeah.
So I was watching an interview on him, and I think his name's Ken Griffin. I get all their names confused. I'm a bad name person. Like, people are, I'm not one of those movie guys that can recite movie lines. You might have friends that do that, but anyway, the reason why I'm telling you this is because he said, and one thing that stuck with me is persistence
Mhm.
and dedication will prevail most of the time. He doesn't say all the time, because you can't say that in trading. Nothing is all or absolute, but most of the time, persistence and he said persistence and discipline. Hold on, I got to go back and read. I actually wrote it down, and I don't write things down like that all the time, but he said determination and persistence almost always win, which,
Yeah.
you think about that, as a trader, you have to have that. I don't, I do
Cor-
understand I
Yeah.
will have bad trades. I'm going to have bad months. I'm going to have bad streaks, but I understand what I do works for me. Doesn't mean it's going to work for you, but what I do works for me. So, it's just sticking through it over time. And like I said, I don't sit here and ever profess to you guys that, oh, I've got the perfect black
Holy
box,
Grail.
the
Yeah.
holy grail. Yeah, I don't do that. And again, I'm not going to sit here and tell you,
The secret.
yeah,
Yeah.
I'm just not going to do that.
Yeah.
Um,
Trading's kind of, you're a Marine. Trading's like a battlefield to me.
yeah.
Only as, you're not in mortal danger. You're in, financial danger, and there are casualties in war.
There are, and I'm
Okay,
gonna, and I'm also gonna say is when, one of the things that, and you will have to take, especially if you guys are, trading different asset classes. I started trading currencies predominantly in 2001, and before that, I traded just equities. And whenever you go through a a change in asset class, it takes a little bit of time to understand what drives the market. Then after that, you can, you'll settle in. And I say that because a lot of people are coming over from, they're trading cryptocurrencies, they're coming over to the currency market, and it's just understanding the markets. You're going to have a little bit of, there are going to be transition periods in your career. Another one for me is always whenever I switch to a new platform. So whether it's, a new execution platform, or I start looking at different charting platforms, then I have to, uh, you have those transition periods that you have to deal with, and there are going to be those, right? So Anyway, all right. So we're gonna go through. We're gonna go through the bias chart. Let me go ahead and start doing analysis with you. I don't mind taking a little bit of time, extra time to talk about these things today because it's really it's more of if we're in more of a vacation period. We're probably missing about 80% of our normal traders, the liquidity, and for that reason you got to be a little bit more cautious about what you're doing, obviously. All right, so let's start with the euro. And the euro dollar, just if you guys haven't seen, is actually trying to break higher, and we've come out of this triangle. I thought we were developing this triangle consolidation. We're above the resistance, and obviously we're going to have to pay attention if we break 122. Well, that's the high was what, 76 or 78. Let me just make sure I've got that number correct. You know what, let me zoom in there a little bit.
Yeah, so that's what it would measure, the length of that above the triangle.
Yeah, so it's 72. I'm going to write down if we continue to break out, which it feels like we are. But I want to point out that the RSI is very divergent here. Doesn't mean the RSI can't catch up. It can.
Right.
I think you just have to be a little careful that it's not following price.
You have a couple fibs at 3.5 up there, Blake. One is what, 1.618 and 8.
Yeah, it's 161% extension. Well, first and foremost, I want to say that we are right now at the 161% extension of this big consolidation, which does concern me right where we're at. I mean, we're here, and a lot of people are failing to look at the fact that we're up there. The bigger 161 or the other one that you were just talking about is the one of the triangle. So this triangle. But I think the risk is that we might actually blow through these highs and test, maybe just above that resistance, RSI diverge, and then we'll fail. So I'm going to write down a couple levels here. I'm going to write down 122.72, which is obviously the high. After that, 123.10. We have to stay bullish. And you guys, if you follow me via Twitter, you probably saw my tweet yesterday. It's like, hey, let me see if I can find it for you. Here it is.
Back in 5, Blake.
Huh?
I'll be back in 5.
Okay. Let's get that. How do I just pull up that? Oh, here it is. Okay. So here's the tweet. All right. It has a nice consolidation and a strong uptrend. While we trade above the 121.80 level, the near-term bias is bullish. It's only below there, a test of the 120 level is possible. And you guys know that from listening here in, from the webinar yesterday. It's only below these, this uptrend line here. That's when you can get near-term bearish. But and so for right now, let's just snap that. 121.76. Now it's going to be 121.90. So while we're above that, there's no reason to be bullish or bearish. But I'm going to say this, you have to be careful with those divergence. And there's a couple currencies that make me really concerned about how far the euro dollar can extend itself. Okay. And one of them has to do with the cable. If you look at the cable, we're struggling here. And I'm gonna tell you guys this, any move even close to like 136, I'd be a seller. I really think that the lack of ability for the sterling to rally following the Brexit deal, that to me would elicit a short because it can't follow through to the upside. I shorted it yesterday, the cable. If you were on this webinar yesterday, I told you I shorted it at 135.22. I closed it yesterday at 134.60 something, or rather 61, or I did really well with it. So that was my trade yesterday. And you know what? I would do it again today. Give me an opportunity to sell it up here. I'd do it again. And I was long. I was actually long quite aggressively on Friday. Was it the day before Christmas? The day before Christmas Eve, I was long all through here. But when the announcement came and we couldn't break out, when we were here just below 136, I pulled the plug on it. Now I just want to be short. That's it. Okay. And if you guys were in the chat room, you already know that I'm short a little bit from this morning, higher than where we're at right now. Okay. Now today, I think resistance is 135.25. I don't think we should break that, but that doesn't mean that we can't make it up to 136. Because if the euro starts breaking higher, if the euro makes it to, let's say, 123.10, I'm pretty sure the sterling is going to be trading right around here, 135.50. Fine, I'll sell it up there. I don't care, right? But I'm not 100% positive that we're going to stay, weak with the euro as strong as it is. Okay. Support is 134.25. That's going to be yesterday's lows. Aussie. Okay, so here's the Aussie. Aussie is also giving me a little bit of a concern regarding the euro. Like how much is the euro going to rally here and not drag up the Aussie? So the Aussie found support at, what is that, 75.58. So what did we write down yesterday? 75.40. I guess I thought we might come down a little bit further. I think I had this trend line drawn like this. So now we know where the trend line is, and I think we can write down these lows from yesterday, and I'm going to just write 75.50. That is support. But we are at really key resistance because this is a long-term. This is a long-term 38% retracement here at 76.30. It is. So if we get a move back up here to these highs, which is basically 76.40, that's major resistance. I think within 10 pips of that level, you could probably trade counter trend. I don't know if I'd take a aggressive short, but knowing this is a big 38% retracement on a monthly basis, 2011 high, 2020 low, that's the 38% retracement. Knowing where we're at, I know I made the case for it yesterday too. It's like, all right, well, if you get up there, maybe that's worth taking a counter trend short. Kiwi, same deal. This is the 50% monthly retracement of the 2014 high to the low, 50% retracement. It's right where we're at. Kiwi's acting a little bit better. We're respecting this trend line support. So that means that the 70.80 is going to be key. And driving that uptrend. Resistance. There's an 88% retracement right here. It's 71.55. This is 71.70 roughly. I'm just going to write 71.70. It's resistance. Dollar Canadian. I had a bid in the dollar Canadian overnight to buy some at 72.90. I actually still have my bid still out there at 72.90 or 127.92. Sorry, I can't speak this morning. It's the 618 retracement. So also, you know, you can see where we kind of broke out of this, you know, channel here, same level. I thought we'd get down there to, you know, and we can still get down there. But the dollar Canadian's acting a little bit better than other currencies at the moment, right? Like the euros push 50 pips higher. The dollar Canadian may be a little bit lower, but it's found support for a while. So, and we had that, what was setting up as a double bottom. It didn't play out yesterday. Could probably caught a lot of longs, but with the euro as strong as it was, you know, that is not surprising that we're back down here. So 120, 127.90 is support, I guess is what I'm trying to say. 127.90. And I'm going to keep us on range. Resistance. Resistance 128.75. Dollar Swiss, or I'm sorry, dollar Mexican peso. This is another currency that's divergent and, you know, holding up pretty well. And I have to point out the US dollar South African rand is higher. There was some news about South Africa. Shoot, what was the news yesterday out of South Africa? Does anybody know?
Something to do with the variant?
No, no, it had
Because
to
I know
do
one of the
with,
variants besides UK is South Africa.
I want to say it had something to do with gold.
Well, it should. I mean, that's what they're known for. Besides apartheid.
So
Yeah.
yeah, I'm trying to. I was gonna say, wait, is that it? Is that it? Really, Dale?
Mandela. Yeah.
Um,
Okay, well, we have someone here from South Africa. They have an increase of restrictions. They're back on level 3.
maybe that's
Oh,
it.
they've reached 1 million
We've
cases of COVID.
Yeah, and the rand is a little weaker today. I don't think that's the reason why, but anyway, thanks guys, appreciate it. Support for the dollar Mexican peso is going to be at 1985. Resistance is at we only went to 2012 yesterday. 2020 I still think is resistance, but I'm gonna write those down. I think that's what it is the million cases is what I was thinking of. I could have swore there's something else. I have to look. Sorry. I'll have to go back and look when I have time. See if I can get back to you guys on that. I'm going to keep it in range. You guys know that the dollar Mexican pesos in range after we came out of that wedge. And same with the dollar Canadian. You know, after we hit the 161% extension, came out of that channel, it's more of a range bound environment. Dollar Swiss. Okay, so dollar Swiss still weak. I think yesterday we wrote down support as 18 or 88.50. Yep.
Be interesting to see if
wait, hold on,
sorry,
Dale.
go ahead.
Look where we're finding support.
Yeah.
Yesterday, 88.50. That's what we wrote down. We were up here yesterday. Our low today is 88.47, and we're finding support across these lows. Still, not bad for free.
No, I mean, people can use these numbers that you have. You could have been short into it. You could have bought it. These numbers that you're giving every day is not just a mental exercise. They're numbers that could be traded off of.
I use them all the time personally.
I know you do.
Resistance at 89.20. I'm sorry, what were you saying, Dale?
Oh, well, I was just going to say that if euro keeps pumping and US dollar Swiss does not make a new low while euro's making a new high, that would be kind of a tell for the Swiss, wouldn't it?
Yeah, it would be. I'm not the one thing that the one thing I always have to think about when I'm trading the Swiss, which I don't trade it often. I don't. And if I do trade I'd rather be long dollars, short Swiss franc, just because I know the Swiss National Bank is active.
Carry.
Yeah, and so they tend to be sellers of Swiss francs. They try to
Yeah.
suppress the Swiss as much as possible. So if I saw the euro hitting highs, dollar Swiss not hitting lows, and I started to become bullish the dollar, I might try to play the dollar Swiss long.
Yeah.
Um, and that, I do that from time to time. Not often though. It
Okay.
just kind of scares me just to be in a trade when I know that central banks
Pull
start to.
plugs. Yeah.
Yeah, they pull that lever, and
Yeah.
next thing you know, you got a trade working against you, or
Can't
for no
trust those
reason.
gnomes.
What's that?
Gnomes. The
Gnomes. Yep.
gnomes of
The little
Switzerland.
gnomes.
Yeah.
I have a garden gnome, by the way. It's an Arizona Cardinals garden gnome, and he has, over the years, he's turned different colors. He looks like a purple gnome now. He's lost all of his colors. Anyway, yeah, the sun and heat, they'll do that. Dollar, US dollar, Norwegian krona, still bearish while we're below. Now this is channel resistance is going to be 870, support 855. Bearish. And I have to point out from yesterday too, just notice how our bias chart is changing. It's not as dollar bearish as it used to be, and it's slightly changing. We have to keep that in mind. Here's the dollar, the DXY. Obviously, the gap fill from a couple of days ago. We could still, maybe drift a little bit lower, maybe to retest the lows. That comes in at 89.70. Resistance. I mean, I'm just going to mark up right here because that the previous support right there, spike low right there, resistance, hourly resistances, all come in around 90.50. It's bearish. Dollar yen. You guys know that I'll just write it real easy. 103, 104. It's 103.90, but same. 103, 104. Let me point out something here. See this red trend line in the dollar yen? This comes back all the way to June, right? That trend line comes in right around 104.25. While we're below that, I think you have to keep more of a bearish bias. Even if you're trading it, I'm not trading the dollar yen. You guys know I have like no desire to trade the dollar yen right now. But I wanted to point that out, that I think you have to keep a bearish bias for now, while you're below there. Okay. But that doesn't mean that you have to be on the short side. I think it's just probably easier to be on the short side of the dollar yen. I'm just going to keep our bias chart at range for the dollar yen right now. All right, let's take a look at the gold market and the S&P. So the S&P, obviously we're at highs. We're above this trend line resistance. If I draw this and go across the top here, maybe that allows for the move up to
3,800.
Yeah, 3,800 roughly, 37.90. It's still bullish, and we're still bullish while we are above, well, definitely while we're above 3,600, but support intraday would be down to 37.20. And I don't think we're going there. So gold. Where's gold? Gold. And then let's see if Stelios is around. Hey, Stel.
Hey, bro.
Hey, 1870.
So that's the only Greek guy you want here.
Oh man, you weren't supposed to be here today.
Go away.
Why are you here, man? I was just talking extra time because I didn't think you were going to be here. How's it going?
Good.
You were out having such a good time. There's no reason to be here.
Yeah, it's been a wonderful morning, but everything has a limit, right?
All right.
Steve loves this.
Say so. My limit. I just reached my limit on face webinar limit right now. No, well, guys, I didn't think Steve was going to be here today. He was out enjoying the morning with family and friends outside.
Yeah, it's unbelievable, but the weather is like spring, literally. I mean, I never remember in my life Christmas with weather like this.
Really?
No.
Because is it usually like cold?
Yeah, it can get cold.
Yeah, not cold for other countries standards, obviously, you understand,
right?
But definitely not the kind of weather that you're going to be with a t-shirt on the beach.
Yeah.
Nice.
Well, this
like
year,
an Indian winter.
This year we do have did you call it an Indian winter?
And yeah.
this year in Arizona, I mean, we're sweatshirt and shorts weather, which is pretty typical nowadays.
Yeah, but you're in the weather. You're in the desert.
Yeah,
it's a big difference.
That's true. Well, you're on the ocean. I don't know if it's that big of a difference, but anyway, well, I'm glad you guys had a nice time. I didn't think you were going to be back today. That's why I kind of took my time speaking. But I'm going to shut up because Stelios and Steve have probably some things to say before today's guest. But let me say this, guys. I'm going to say this. If you want to be part of the Forex Analytics community, this is the time to do it. We are launching our New Year's special, obviously coming up in a few days. So if you're waiting to take advantage of that, that's perfect. But if you want to try Forex Analytics, right now is the time to do it, because you can't do that when we launch our pricing special, which is a great special. Now,
yeah,
also,
there'll be no trials, is what Blake's saying during that time period.
Yeah, exactly. And also, I want to say if you have to click on, if you want to try to get Forex Analytics for free for a few months, click on this link right here to open an account with Pepperstone. If you're outside the U.S. and Canada, you can get on a new live account. You can get 2 months free of Forex Analytics. You trade 5 standard lots, which is just 500K, which most of you will do within a certain period of time. You'll get 2 more months of Forex Analytics for free. So that's a way to join our family as well. So I hope to see you guys part of the family. I'll see you guys in the chat room. Steve, Stelios, it's yours, and Dale, obviously. So
see you, buddy.
Thank you, Blake.
Right. See you
Thank
guys.
you, Blake. Bye-bye, mate.
So I just want to add something on what Blake was saying in the beginning. Maybe you weren't here, Steve.
I definitely wasn't here.
Yeah, he was talking about, difficult years, like this has been a tough year and everything. And, people who have found it tough are not alone. I was doing yesterday my annual review of my year, and I realized I've done many fewer trades than I usually do during a year. So, and this for me is because certain things I don't understand about the markets this year. The correlations didn't work, and you had so many tape bombs and binary events and this and that. So it's really useful to adapt to circumstances, and I certainly try to adapt. I did fewer trades. I was lucky enough that my biggest trade of the year, long silver, brought me nearly 50% or something like that. So that made my year. But man, it's been very difficult, and being nimble and being able to adapt to circumstances can make the difference between
exactly the same happened to me, Stelio.
Yeah, blowing up or carrying on.
Yeah, exactly same here. I mean, a lot fewer trades.
And
But
it makes sense. It makes
yeah.
sense. Patterns getting invalidated and and not following through, and it's been very difficult. But you have to adapt.
I think it's the right thing to do, because when the market is is not easy to trade, you should just focus on the higher probability trades, no matter how many they are, right?
I agree.
I mean, I've been in the short USD NOK and Euro NOK trade for months now. They've been working for me, and other than that, I've jumped to very small trades, and it's okay. I mean, I have no problem having concurrently 5 or 6 positions, which it has happened multiple times, but not under current circumstances.
Yep.
Well, guys, traders aren't paid for transaction volume. Brokers are.
Very, very, very true.
Okay, so I mean,
very true.
Yeah, so maybe
also you're not getting paid for accumulating positions. You're getting paid for positions that actually make money.
Right.
Whatever happens, Duke and Duke make their commission, right?
they did, and Win put them out of business.
Yeah.
Remember his badge? Yeah, Win. Yeah, that was Eddie Murphy's floor badge.
Yeah. So we're getting close to the end of the year.
Yay.
Today markets are doing exactly. Today markets are pretty quiet. Nothing major happening again. The dollar dripping a little bit. Indices, dollar dripping lower. Indices dripping higher. And really, I'm not paying any attention to it really until the first week of January.
I find quite interesting the price action here in the indices, Stelio. I want to find out, and I think we're going to find out rather soon, if this is an attempt of a little overthrow in these wedges. Here's the Nasdaq and here's the S&P. To get people long at the worst possible time, or if we're about to see a legitimate break higher and an accumulation. Because don't forget that in markets like that, there is always the possibility that despite the previous strong moves, you might see a blowout to finish the move, right? So keep that in mind. That's not out of the question as a possibility. I'm really looking to find out which of the two it is. If it's a blowout move, I'm not even going to attempt to fade it, because it might last several days to several weeks. But I will like very much to see a blow-off move, because blow-off moves are always terminal moves, right? Recent examples is this one, but even a better example was the price action we had here. We were here on face, so I know you guys remember it, at the end of 2017, when the market blew out of this ascending channel, then created a new one, blew out of that, and started going more and more and more vertical. And once that happened, the bottom fell off, as it usually happens, because blowout moves almost always end up in tears for the people that joined in very late. In this case, for example, if you remember, we retraced months of price action within a week. Yeah, exactly. Same deal happened here pre-COVID, where we actually retraced more than months of price action in just a couple of weeks, 3 weeks, whatever it was. So I really like to see if this scenario plays out, a blowout move to the upside. I think any serious reversal after that is going to produce big follow through, even if it proves to be short-lived, having to do with time. It might last 10 days, 2 weeks, 3 weeks, but as we've seen again and again, within that small period of time, you might end up retracing, for example, the whole move that started from March, or depends on how high we will have gone. Let's say we have a blowout move and we've gone, let's say, to 4,200. You might see a retracement back to 3,400 within a matter of 2-3 weeks.
Yep. Well, it will be interesting to see. I have one or two little things to mention. I mean, there's nothing really happening news-wise, but we did have Michael Barnier of the EU saying, sounding quite positive and saying, you know, we delivered an orderly Brexit and this is bringing stability. And obviously, they look like the good guys. Both sides actually look like the good guys,
Yeah.
and they save the situation and bring stability, and which, you know, in a way they are doing it. So, but they didn't have to, you know, bust our chops for months and months before doing it. You know, it's
Yeah, but you know, it's in their nature. They really can't avoid it, right?
yeah, true. Otherwise, I mean,
Speaking of
yep.
which, I'll reiterate what I said yesterday. This is not the type of price action you want to see. You know, if you were really extremely bullish pre-deal, you know, for a post-deal type of move. I mean, price action here would seriously trouble me if I was long. So I think people should be very, very careful with the pound.
I agree. I think cable is £1 pair that I wouldn't want to be long the pound. So
Yeah.
dollar against the pound, I wouldn't want to be long. Yeah, let's see. The only other thing worth mentioning, I read today that, I mean, obviously I'm not there, so I can't know if it's true or not, but I read that there's some areas of Beijing are being closed down and put under quarantine. It seems like
COVID.
things are flaring up a little bit. Obviously not a major issue yet, but you know, this thing is not gone away yet. Clearly the vaccines are going to help and everything, and I think eventually we will go back to normality, but it may not be a straight line. That's all I'm saying. So
Yeah.
worth just remembering that before we go all guns blazing along everything, and you know, markets never go down, etc., etc.
Do you guys, you know, Ingmar is asking, and I've been hearing about this, I don't know, for months now. Have you guys done any reading on the so-called quote unquote Great Reset and what it means? And is it conspiratorial, or is it something that central bankers and, you know, BIS and IMF are embracing? You guys know?
A great
I
reset, a
don't.
great reset inevitably is coming. I don't know though how you define the great reset.
Well, I mean, they already have like plans of what they want to do for a Great Reset, is what I'm reading.
I can tell you in advance one thing, that when a great reset happens, which it will, and it's going to be in our lifetimes, I don't think it will follow any of the plans they have in mind. I can tell you that much.
Okay.
It's going to be very disorderly. It's going to be very chaotic for the markets. I know that everybody has become complacent and they think that central banks are omnipotent and
yeah.
they and they can control everything. And now they found the magical recipe to in essence make sure that, you know, volatility stays dead forever. But whenever in the past there were assumptions like that made, they were always disproved in the worst possible way. Now, why are we going to have inevitably a great reset? Simply because, globally speaking, debt is completely unsustainable. And the fake economics that we're now applying to pretend that everything is okay, there is going to be at some point a trigger. I can't guess what it's going to be. And, you know, the house of cards is just going to collapse, and then we're going to have some type of a great reset, which is also going to have to do with the monetary system, as it has happened many times in the past. But
anyway, there's a link that Ingmar put up there, and it's by the World Economic Forum. So they actually have a piece, whoever they are, about what their plans are. And I'm hearing more and more talk about it everywhere, you know, even sitting in my backyard here, in my next door neighbor.
From what I see, this is talking about a specific type of reset in accordance to like the COVID crisis. So it's yeah.
Anyway, it's becoming, you know, kind of, people know the term now. So we'll see. They think that
that's not what I mean when I'm talking about a great reset, though, as you know.
All right. Well, this is what people are talking about. Thank you. By the way, thank you, Sinatra, Ingmar.
Yeah, thank you for sharing, mate. I'm going to actually I'm gonna read it.
Okay.
Do we have a guest today, right?
Yeah, Lance
Okay.
Lewis is with us.
Okay, great.
Okay. Okay.
Super.
All right. So
Perfect. So we cover more instruments tomorrow. I see questions about the metals, etc. I can very briefly tell you that I've had a good look at everything. Nothing has technically changed since yesterday in any of the metals. Nothing.
Kitty
So-
agrees. Yeah.
Aleki agrees with me.
Yeah.
So whatever I said yesterday literally applies, because it's not that today we've had any moves that change anything, and I don't expect this week. Of course, there can always be a surprise, but I don't expect this week to surprise us with any weird big moves or whatever. So don't expect or bet that you can get like amazing price action during the week. You never know, but I think it's unlikely.
Isn't it kind of a testament of we really have a well-informed a bunch of attendees in face every day. I mean, every once in a while, not everyone. When I don't know something, I put the question out there. There's always someone from our attendees that has a response. It's almost like, we really have a community of very aware people.
Yeah, the same applies to Forex Analytics subscribers.
Oh yeah.
We don't talk about that often, but I can tell you one thing for sure is that the path we've chosen for Forex Analytics is really not the path that will ever make us rich, because we're not trying to sell hope to clueless people that they're going to become millionaires, etc. The type of people we in generally attract, which unfortunately is like a small segment of the people that are getting involved with trading, is people that are serious about it, understand and have a basic knowledge of what being a trader means. Doesn't mean that you're going to be rich overnight, doesn't mean that you're going to win the lottery. You need to work hard,
grind it out
and grind it out to make a living. Yeah.
Show us a picture of you getting out of your Ferrari into your private jet, Steve. Huh? All right.
Yeah, sorry, I've sold the Ferrari. I bought a Lambo. It's more in fashion now.
All right, man. All right, Lance, I'm going to get you set up now, and look forward to hearing what you're thinking going into year end. Where are you? Okay, Lance, are you there? Maybe I did.
Tell me his last name.
Lance, I forget. Lance Lewis.
Can you hear me now?
There you are.
There you are.
Got you. Yeah, I can hear you now, Lance.
All right.
Happy holidays. Happy holidays, buddy. So, were you going to share your screen? I don't think
I'm
you
trying to do that right now. There it is.
You can share your screen,
Okay,
you
buddy.
can share your camera, whatever you feel like it.
All right. So I know you're real in tune with the gold market here, and what your thoughts are, partner, going into year end. That formation breakout's going to be pretty bullish, right? And if we roll over, maybe there's one more shoe to drop to the downside. What are your thoughts? And I know you're a big follower of COT. What's the setup with commitment of traders now going into year end? I know they had huge shorts before the last leg down. Have they gone neutral in gold, or how are they sitting, and what are you thinking?
Well, no, they're getting increasingly more short. However, ever since March, you had a big expansion in open interest back then, and then the leverage players basically left the market when it collapsed in March. So the spec short position is not back to levels that you saw in February, oddly enough. Even though price is obviously much higher, because like I said, those leverage players never really came back after everything imploded, and all that the activity was in ETFs for the most part in the gold market. But now the leverage players seem to be returning to the market, And, I think I think the last time we talked, I can't remember when it was. I think we were undergoing a correction, we're looking for this to sell off down around 1750 or so. We got down to 1760, and my model actually gave a buy, on the turn there on the low, and it's been there ever since. And my expectation would be you are going to break out to the upside and head higher, into next year.
Okay. I think there was one jiggle that shook some of the bears out, was that move in November when we broke out over 1920. And, that was kind of shook out a lot of bears, and wasn't easy to stay short through that, was it?
No.
Okay. Because I was getting your stuff. So let's see. You have any price levels? Do the miners look good to you, or is it basically just bullion itself?
Yeah, I mean, the miners look good here. This is actually an hourly chart of spot gold, and as you can see, we're in this compression triangle.
Yeah.
And the breakout would be up around 1900. You had a futures expiration yesterday, and now that has passed, upside may now be uncapped to some extent, whereas it was capped before by the expiration. But with the dollar, I don't anticipate a big rally in the dollar, until maybe later in January, just because it may be due for one finally. But I think
now there's a market that has some extreme sentiment, doesn't it? The dollar.
Yeah. Well, I mean, actually, you know what? I mean, according to the DSI, people have gotten a little more bullish on the dollar here recently, even as it, making new lows almost daily. But it's still weak against, the rand, the peso, the yuan. I mean, it's weak against everything. It's not just the DXY, which is 60% euro.
Right.
So
I was going to ask you about euro, because the way I see euro, do you follow euro, or just mainly dollar? Is that we're breaking out of a triangle. It's been about a 3-week formation, if you have a chart of it, and there's gold. Let's see what your chart looks like on euro. Okay, so that if you go to a little shorter TF, what's this, a weekly or a daily?
Maybe daily.
Go to a little shorter TF. That we've been in okay, there you go. So we're trying to come out of this triangle and break out here. And I think the measured moves about, 3.5, 124. And I'm not an Elliotician, but this looks like a 4, this whole consolidation, which implies the next shot up in the euro might be a terminal thrust. But can you think of anything, any narrative that would be bullish a dollar? Because not many people could come up with a narrative of the only thing I could think of is possibly some risk off, or how about that $600 is deflationary? It's not going to be enough. I bet if Jerome Powell had his say, this COVID relief package would have been much more robust. And then who knows when they'll be able to put together another fiscal package, and who knows what the makeup of the Senate is. So I'm thinking that, I think now any kind of economic news of contraction, instead of it being bearish a dollar, could be bullish a dollar. What do you think?
I would tend to agree with that. But although I will say with this, with the $2,000 checks now entering the mix, and the House,
you think the Senate's going to pass that?
Well, I think the odds are against it. However, because of the Georgia runoff, the Republicans are kind of put in a tough spot. If they vote against it, it could potentially cost them the Senate next year, which would then, ensure a much larger stimulus package from a Biden administration that has both houses of Congress. So it's an interesting spot where if they move forward with it, you're going to get, much more stimulus. If they don't move forward with it, you're going to get much more stimulus, except, probably sometime in February, March from the new administration that then has both houses of Congress. So, like I said, it's an interesting dilemma.
Yeah. Any other sectors of the market besides metals? I know it's one of your major focus. The big theme is that commodities, all commodities, are looking pretty good. That it's embryonic. Grains have been acting good, and wondering what you're thinking in other markets. Wow, what's that?
This is the old the CCI index that used to be the equal weighted commodity index. That doesn't exist anymore. But this ETF it tracks it, so it's kind of the only represent. That's a bad.
So tick. Really, we've been just like the stock market, commodities have rallied with risk on.
Yep, and everything's kind of lifted together. As the dollar's gone down, everything not nailed down has drifted higher, and that's kind of been the theme all year. And like you said, the one bad thing for asset prices would potentially be a dollar rally, and I agree with that.
Okay, a lot of some dollar bulls that still exist talk about something like the dollar shortage. That supply demand dollar shortage. Are you familiar with that bullish argument for the dollar?
Yeah, I don't really buy that necessarily.
Yeah.
As long as the dollar is the world's reserve currency, there's always going to be demand for it. But with the giant current account deficit we have, it's going to continue to come under pressure, I believe.
Okay. Are you hearing a lot of chatter? I brought it up in Face today about the Great Reset. Do you have any thoughts or what what people are putting out there that are talking about a Great Reset? If you believe there is some type of plan by, globalists, elitists, to take advantage of this pandemic and restructure things economically. I think we've heard from some IMF people and BIS people. Any thoughts on that, Lance?
I don't think there's any grand plan out there. I think politicians are basically, putting out fires as they arise, and they're not that smart.
So, well, what's a big play for 2021?
I think for early 2020, I think gold looks pretty good. Gold and it's probably more so silver. I think Bitcoin will probably continue to outperform, although it's probably due for a rest. It's gotten so hot here over the last several weeks. But, between now and April, I would anticipate gold's going to do pretty well.
Why do you say April? Why do I keep hearing April for, possibly the end of the stock market rally, maybe 3,900, 4,000 S&Ps into the spring. I've heard it from different people that, look at markets differently with different methods. Why are you looking at April?
Well, just on a monthly basis, it would be, looking at the past 40 years and gold prices and gold mining equities, it would be unusual to get a huge move beyond that without getting, some sort of rest. So that's, who knows exactly what's going to happen, but that area of time seems likely for some sort of high, potentially.
Okay. I remember in, the pre-internet days when, you had a quote monitor, you weren't getting things online, that there was traditionally a February break in commodity prices. And so that's pretty close to April. Mm-hmm. And that there have been some significant highs in the precious metal market in February. I know and remember, because I remember getting long one February and reading an article about how February is filled with heartbreak for gold bulls, and that particular year it was. Have you ever heard that seasonal tendency?
No, although there's an interesting statistic. Gold price was up 9 weeks in a row back in July, August, And that's only happened 2 other times in history. And in each of those prior times, gold was lower 1 month, 3 month, and 6 months later. So now gold has been lower 1 month and it's been lower 3 months later. 6 months is February. So what that would entail is, I think we've seen the low in the gold price, but if the historical precedents are to hold, gold cannot make a new high until March, interestingly enough.
Okay,
If-
interesting.
If that
Yeah.
were to hold.
Okay.
But it can
That's
get real close.
yeah. Okay. So you think this breakout of the triangle, when I look at gold up there, that was confirmed by momentum, the high up there at 2080. So maybe 2021's a year of $2,500 gold. Been a long bandied about target. Think that's
That's a pretty good
possible?
bet.
Huh?
I said, I think that's a pretty good bet.
Okay. Anything else you want to cover with us today? I know it's a quiet market right now, Lance. And
Yeah, there's not, with,
You know.
with the year winding down, there's not a whole lot going on.
okay. You want to show your website, how people could follow? And Lance did provide me with his interday updates. And I just have info overload. I get a lot of it, Lance, but I read it. It's good stuff. So people are interested in following Lance's work, especially if you're, a gold person. This is how you do it, right, buddy?
Yep, that's how you do it.
Okay. So I want to wish you a happy new year, Lance. I hope you and your family remain untouched in this poisoned air environment that we have right now, and that you have a great year in 2021. Glad our paths crossed, and want to thank you for coming here and sharing your views with our community.
Yeah, want to wish you the same. Have a great Happy New Year.
Happy New Year, buddy.
All right.
All right, so that's a wrap, everyone. We'll have one more day to wrap the week tomorrow, and want to thank everyone. Sinatra's saying thank you, Lance, and people are thanking you. And if you're still here, would you buy physical? Okay. All right. I think Lance took off. We'll see everyone tomorrow to wrap up the year. You're welcome, everyone. Remember, don't just count your pips, count your blessings. Okay. Deal? And join Forex Analytics. Don't forget that. Adios, everyone.